An overall bullish week for natural gas markets saw regional forwards rally sharply from coast to coast during the August 3 to 9 trading period, while a mix of strong demand and supply constraints helped drive outsized gains for the U.S. nat gas market. That rally was triggered by speculation that America's favorite fuel for indoor cooling and heating might be facing a supply squeeze from pipeline issues. Analysts warned earlier this week about maintenance issues on the Nexus and Rex pipelines that could slow gas production, which had often breached the daily threshold of 1 billion cubic feet. But any concerns of supply tightness were offset by the EIA's weekly report Thursday on natural gas inventories, which showed gas stockpiles rising 29 billion cubic feet during the week ended August 4 versus a forecast injection of 25 billion and a prior weekly build of 14 billion. Temperatures are expected to be much hotter than normal across the southern and central U.S., remaining above normal until the end of August. The total number of active drilling rigs in the United States fell by 5 again this week, according to new data from Baker Hughes published Friday. The total rig count fell to 654 this week. So far this year, Baker Hughes has estimated a loss of 125 active drilling rigs. This week's count is 421 fewer rigs than the rig count at the beginning of 2019, prior to the pandemic. The number of oil rigs stayed the same this week at 525, down by 96 so far in 2023. The number of gas rigs fell by 5 to 123, a loss of 33 active gas rigs from the start of the year. According to data from S&P Global Commodity Insights, the average total supply of nat gas fell by 0.6% compared with the previous report week. Dry natural gas production decreased by 0.4% to an average of 102.2 billion cubic feet per day, and average net imports from Canada decreased by 4.4% from last week. Total U.S. consumption fell by 2.9% compared with the previous report week. Nat gas consumed for power generation declined by 4.5% week over week. Industrial sector consumption increased by 0.1%, and residential and commercial sector consumption declined by 1.8%. Natural gas exports to Mexico increased by 0.6%. Natural gas deliveries to U.S. LNG export facilities averaged 12.1 billion cubic feet per day, or 0.2 billion lower than last week. The current market sentiment for nat gas remains slightly bullish, as the current price of $2.85 managed to stay above the 10-week moving average. A sustained move over the $2.85 level will indicate the short-term buying pressure is getting stronger, with a retest of $3 as the next likely target. A failure to hold $2.85 will restrain some of the upside momentum, but the uptrend will remain intact unless pivot at the $2.65 fails as support. Thank you for watching. Please like, subscribe and hit the bell. See you in the next video.